Hey guys, AKIL'S here. Welcome back to another Trading Edge video. If you guys are brand new, welcome to the channel. This is a video I do each and every weekend, sharing with you the top trading opportunities that are on my radar for the week ahead. Today, we're going to talk a lot about complex reversals. And don't worry, it's not too complex. They're just called complex because they happen in more moves than a simple reversal, I guess you can say. So don't get scared away. Now, real quick, before we hop in, I want to give a big thank you to you guys. A couple weeks ago, I said I had a goal of reaching 55,000 subscribers by the end of the year. We're not quite there yet, but we are extremely close, just a couple hundred to go, and it's only June, I think. Yeah, June. So keep it up. If you're watching the channel, if you haven't subscribed already, make sure you do, support the show, and also share this on your socials in case anyone else wants to get this cool trading knowledge. So let's hop in. Now, before we hop in again, one more thing. Let's take a look at what is on the economic calendar for the week ahead. We have a few more interest rate decisions coming this week. You can see that we have the Fed, FOMC, on June 18th. The day after that, we have the Bank of England on June 19th. I think we have one more, Swiss National Bank on June 19th, and the Bank of Japan on June 17th-ish. They're always a little bit sneaky. They do it like at midnight in these weird times. But Japan, Swizzy, Bank of England, FOMC, all interest rate decisions. And remember that the interest rate decisions, these are the biggest fundamental gears in the market. Not all are equal, and we can dig into that once we get started throughout the week, but certainly put them on your radar. And these are those type of times that you probably don't want to trade while that announcement is going on. Now, with that being said, let's hop into our charts. We're going to start here on the Euro Aussie. And the Euro Aussie had an interesting end to the week. We've had 3 straight bullish days, but are they really bullish days? No. Well, technically yes, but no in the way that we think of them. So one of the things that we teach over at Tier 1 Trading is learning about the anatomy of a candlestick. There's actually a YouTube video here that you can search somewhere. Maybe I'll put a link in below. Maybe I'll pop up screenshot. I don't know on that if you want to learn. But pretty much what we're talking about is, although a candle is green, which technically means the close is higher than the open, it doesn't necessarily mean it's bullish. What we want to do is we want to break that candlestick up in thirds and actually see where the open, high, and closes are. And if you take a look at these past 2 candles, right, these bullish ones, there are 2 things that stand out, and it is the length of the wick to the upside. Remember, the wick represents the extreme that price went to the session. And what that means is that price pushed all the way up here during the session, but then came all the way back down to close here, which isn't necessarily a bullish sign because it closed in the middle third, which is more of indecision. On the very next day, we did the same thing. We opened here, we came all the way up here to the highs, but then the bears beat it down and we closed somewhere in the middle, giving it more signs of invitation. Now, more signs of indecision, right? Friday nights, these Friday night videos always get weird because my brain is complete mush, but it's tournament season and my kids got soccer tournaments tomorrow and I'm going to do nothing after that is done. I will be burnt out even more than today. But what this means is, what this doesn't mean is, it doesn't mean you should sell right now. This is a sign of indecision, not a sign of bearishness. But it should tell you to look a little closer and see if there are any signs of reversal. Now, a few things we can look at here. One, look left, structure leaves clues. We are coming up into a previous level of structure here on the Euro Aussie. Euro Aussie did something like this. Yay, I'm going up. Ooh, I'm going to consolidate. Ooh, I'm going up. Ooh, I found some structure support. Ooh, I broke down. And now we're right back into that level that broke previously. And if we go down to the lower time frame, we're going to get an even bigger clue of a potential complex reversal, right? And again, don't be intimidated. So let's go down to a 4-hour. And what you're going to see here is a potential head and shoulders pattern forming. I'll take my head and shoulders pattern tool over here. A head and shoulders looks like this. A clear move up, followed by a retracement, followed by a small extension, followed by a deep retracement, followed by a failed extension. And then if we can violate the neckline, which is connecting the dots between these 2 bottom parts, or if you're into horizontal support and resistance like I am, just grabbing the lowest part and looking for a violation of that level, that would complete / validate the head and shoulders pattern. And this is a sign, or this would be a sign for a reversal. So if price action were to do this, right? If you're an aggressive trader, you can sell it on the breakout. If you're more conservative, look for a bounce back up like that, a retracement, and then treat it like a pullback trade. There is a chance to trade this bad boy south back down to the $1.75 level. Now, if that was confusing, don't worry. I've got many other examples for you, so we're going to get lots of reps at identifying this. Our next example is going to be on Euro Canada, and this is going to be a little bit different. It's not necessarily a head and shoulders, but if you look closely, you may be able to see where a head and shoulders formed, right? Can you see it? Can you see it? Can you see it? I'm going to buy time and filibuster until you can see it. Are you following along? Whoa, 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 whoa. And then just like we spoke about, right, here is that break, that pullback, and that move down. Now, when initially looking at this, I thought the move has been made, right? We already came back into our previous structure highs right here. No more meat on the bone, throw it away, right? But as I brought in my volume profile tool, and I'll show that in a little bit, I actually saw that there was more meat in the bone. And this is a conversation we had yesterday in the live trading room. I'll give you a very, very brief version of it. Was highly against volume when I first got into Forex trading because it's a completely different market than stocks and there's no central bank, meaning there's no actual central volume. Had some conversations with Mike Bellafiore. Decided to do a deep dive back in the volume, did a deep dive for about a year back in the volume, realized that no, I still don't like it. I understand it more and I see how it could be usable, but I still don't like it as far as your traditional under the chart volume type of deal. But one of our tier 1 trading members said, hey, you should look at this volume profile, I call it horizontal volume, a little bit deeper because although you kind of just brush it aside, I think it aligns with how you read the market. So I looked at it a little bit more, did another 1 year deep dive, and now I love it. And the benefit of it for me is that it allows me to unblur those blurry situations. So what I mean by that is this. Sometimes when we look at a chart, there's going to be very clear levels of like, hey, I want to get involved here or I want to take profits there. Sometimes it's going to be a little bit blurry where it's like, that level is kind of okay, but there's also a kind of okay one right above it. And it's kind of hard of which one to pick, right? I was, let me know if you've ever been like that, right? I was going to say, I was having another conversation with a trader about that, but I teach, right? So I'm always having conversations with traders. But let me know if you've ever had the situation, you can put it in the comment section below, where you've looked at two levels and you kind of weren't sure which was going to be the more important one and the least important one. And maybe you got that paralysis analysis where you stood there and did nothing because of it. This was something that actually gave me an extra clue to say, hey, this level is important or this level is not important. And here's a great example. So what we've done here after coming off that head and shoulders, we put in a nice tight consolidation. I love these patterns, right? Because they're going to break out, right? Consolidation, contraction leads to expansion. Boom, they're going to break out one way or the other. So what I need to do is now I need to anticipate which way it's going to break out, but more importantly, wait for the breakout to occur. Predictive in my analysis, reactive in my execution. So if I'm looking for a breakout to the downside, because that's what I would guess here. The question is, where are we going to break out to the downside to? And initially, I draw my little line out here. And I say, oh man, we're at structure. We already hit the highs right here. The move has been made. I can't get involved. But if I bring my little volume profile tool on, or my anchored volume profile tool, you're going to see that there is a little bit of a void. And essentially think about areas that spike out a lot as being levels of interest. Do I have like I don't know. There we go. Haha. Interesting level. Ooh, market likes that level. Interesting level. Ooh, market likes that level. Areas that have the void, maybe not so much interest. And price tends to kind of pass through these levels without much obstacles in the way. So what that does is instead of saying, hey, the move has been made, it allows me to say that, hey, you know what? We can actually come down to this structure level right here, right before the volume starts to pick up. And that just offers opportunity where there wasn't opportunity before. Obviously, there's no opportunity to trade it here, but now we can do the thing where we break out and maybe pull back and look for a move down here. And there's still, whatever 40, 50 pips, depending on how far it pulls back, pips to grab here. So a good example of, again, a head and shoulders that already occurred, but more importantly, a potential bearish breakout pattern, and how using these extra tools, getting these extra clues, can help you find trading opportunities that looked pretty crappy beforehand. All right, now back to our head and shoulders. We actually have two of these setting up on the Aussie yen. There's a big one right here. We're not going to worry about that too much, but you can also, write that down and take it into account. But we're going to look at a smaller one which exists in here. So very similar to whatever that first pair we looked at, Euro Aussie, I think it was. We have a bearish candle, but is it really bearish? Technically, yes, but not really, right? The bears pushed it down. We started up here and we came all the way down about 140 pips. But then the bulls sucked it up, and it was only able to close about 30 pips below its open. So we call this a weak bearish candle because it closes in the upper third. This is actually a good sign for a potential buying opportunity. What I would love to see after this, just from a candlestick formation, is a higher high, higher close. So the next candle needs to break above and close above it. But as we go down to a lower time frame, we get a little bit of a clearer picture of what the battle was within this candle. You can see it already here on the 4 hour. Let's go down to a 1 hour, and we have it once again. Extension down, retracement back up, shorter extension lower, deep retracement here, failed extension so far here. We have yet another head and shoulders pattern. Again, neckline slanted, neckline horizontal, whatever your personal preference is. If we can validate this pattern, the expectation is that we return to our highs up here. Oh, so you wanted another example, didn't you? Well, I don't have one for you here, but this is another cool opportunity. Canada yen 4 hour chart. Identify, predict, decide, execute. We can see that price action has come to retest our previous structure highs. Look left, resistance right there. Look lefter, if that's a word, resistance right there. We are retesting those previous structure highs. If price holds that level, we would expect a potential bearish move, a little bit of relief. If price breaks and closes above it, then boom, we would expect bullish breakout. Now, as we dig a little bit deeper into this on the hourly chart, we're going to see something else setting up. We've been talking about complex reversal patterns. We're now going to talk about harmonic patterns, advanced pattern formations, and this one's going to be called a cipher pattern. Our swing high to swing low is going to be our X to A. Our retracement right here is going to be our A to B. Our extension down here is going to be our B to C. And right up about here was our completion point right at the 786. Now, if you haven't seen it already, I just put out a video 2 days ago. It was called The Number One Reason Traders Do Something Bad Trades. I got my YouTube up, so I'm going to find it right now. Just bring it over to you guys. It is called The Number One Way to Eliminate Bad Trades, where we actually walk you through the rules of the cipher pattern. I don't know why I said we, me, I do. But we also talk about the bigger picture, the more important topic of having a rules-based trading strategy and how having a solid set of rules using that if-then syntax, if this, then that, if this, then that, or put together like a checklist or a flow chart where it's step 1, if yes, go to step 2, boom, if yes, go to step 3, can keep you out of trouble, can keep you out of bad trades, because as you go through the process, Friday, there we go. As you go through the process, and we did it 3 times in the video, if you are about to make a mistake, you will be stopped before you ever get a chance to make that mistake. And it just happened to be the cipher pattern is the pattern that we're looking at in that video. So really, really, really important video. Check it out. But we have a cipher pattern here. We are currently trading above the completion point. The original completion point was right here. So this pattern is valid until we get to the X leg. So if you're someone that was late to this is a nice little shorting opportunity for you. Dollar Swiss time. We're back to our head and shoulders pattern. But real quick on the daily, you can see look left structure leaves clues. I'm going to annoy you with that all day until it's ingrained in your head like it is for me. Price action came to a previous level of structure support. We held that support, nice indecision candle, meaning the market's having to think. Let's go down to a 4-hour chart. You can see it forming already. Real quick, just let's identify the previous break and close above structure right at this level right here. So nice little ice zone where, again, support was retested. Again, these things work in zones. They don't have to be exactly correct. a level of resistance right there. But we go down one more time frame and hopefully your eyes are seeing it by now. We have an extended move down, a brief retracement back up, a shorter extension to the downward, a long retracement back up, and we're putting in a potential right shoulder here. Deleted it by accident, but you guys get the point. Another head and shoulders pattern. Again, at a key place we would expect a reversal at anyway. Next, we're gonna head to the Nasdaq, right? The nasty Nasdaq. It's been nasty lately. Look at these legs down here. Ooh, baby. Anyway, so this is gonna be just more of a simple candlestick anatomy type of thing. We have red candle, dove down, gave us a very nice tail right here. We have another red candle, dove down, gave us a very nice tail, closed in the upper third, giving us a weak candle. And then we ended the day, or ended the week, in the session, with an indecision candle that is also an inside bar. Remember, inside bars, these are bars, this green one, that completely within the range of the bar directly to the left of it, called the mother bar. Two things you look for here, right? If you're looking for a buying opportunity, right? Last time we saw rejection at this level, we shot up, so it wouldn't surprise me if we did it again, especially given the fact that we already came down to test these lows right here. Zooming out, here's a look at the Nasdaq for you with these higher lows that are forming. But two ways you can approach this. One way would be aggressive, where you can trade an inside bar break. Either you put a buy stop right here above that mother bar, or even closer above the inside bar, and that way if price breaks in your direction, boom, you're filled. You can ride it up to this previous level of structure right here. Or if you're a little bit more conservative, you can wait for a higher high, higher close, right? Again, confirmation of that break and close above, and then boom, ride it up to this structure level over here. Or if you're even more conservative, right? We have different levels. Every trader we work with is different, so we teach different levels of aggressiveness, because some are super aggressive, some are super timid. You can look for, say, a double bottom, where if price does something like this, comes back, holds here, then you can look to trade it up right here. There is one more I can give you, 26.18. We might as well do it. If price gives us the double bottom and then we rally up and we break the high of this and then we retrace again, I apologize if this is confusing, then you could look for the 26.18 up. There's another video I put out called Trading the 26.18 from start to finish about a week ago. So if you want more details on the 26.18, don't freak out. Just watch that video and you will learn all about it. Speaking of learning, if you want to learn how to trade, check us out, www.tier1trading.com. I don't plug it nearly as much as I should, but we do work with traders of all different levels. I recommend starting with the 14-day risk-free trial membership that gets you on the platform, allows you to talk to the community, take some courses, not all the courses, but some of them, enough to get your feet wet. Join our live sessions and really see if our program is fit for you before you make any type of commitment. We say risk-free because there's no scammy auto bill or anything like that. You just lose access after 14 days. So check it out. I'll see you guys on the platform. I'll see you guys on the next episode of the Trading Coach Podcast. And until then, plan your trade, trade your plan. Take care.
I want to be the best in the game. Invest in my name. Check no restraints. I'm obsessed with the pain. I ingest, I retain. Assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout, and fame. Mud, disease, a plague. We all love to hate. Have to play the game. Have to make a name. All our insecurities are on display.